I am Sherri Haymond, and I lead digital commercialization at Mastercard. So I'm responsible for building Mastercard's businesses across AI and agentic commerce and stablecoin digital asset blockchain. It's a relatively new team. I used to lead fintech and digital partnerships, and that turned into global partnerships. I mentioned that because a lot of the focus of this conversation is going to be about kind of the changing, trends that we're seeing. Like, obviously, there's been a lot of change in the past, let's say, 18 months, right? Regulation has become a lot more clear. A lot of new players are entering the space. Mastercard, for example, like we've announced the intention to buy BVNK. Like, we're incorporating a stablecoin orchestration platform like into our business, and like for us, that's kind of a big deal. I'm joined here today by leaders across investing, research, and banking. So they bring some really interesting perspectives, and we're excited to get started. So Wilson, we'll start with you. If you can introduce yourself and just let everybody know what your focus is.
Yeah, sounds good. My name is Wilson Withiam. I lead research, and I'm on the investment team at Syncracy Capital. We are a long bias hedge fund that strictly invests in liquid token markets.
Hi, everyone. My name is Mike Kraslow. I lead later stage venture at Mirae Asset, which is a large multinational asset manager headquartered in Seoul, Korea. We're in about 20 different countries and have about $1 trillion of AUM at this point. I invest generally, I'm a generalist, so well beyond just crypto, but my first crypto investment was probably 2018 in Falcon X, so been focused on the space for a while.
I'm Suzanne Miller. I'm our head of partnerships at Erebor Bank. We are a nationally chartered bank founded by Palmer Luckey, the founder of Oculus and Anduril. We kicked off, received our charter in February, opened the bank for business, and relevant to this conversation, we're the first and only bank that fully supports stablecoin as a payment method alongside all the other standard banking rails.
So Suzanne, let's actually start with you. So it's obviously really interesting, that a federally chartered bank is like building its whole infrastructure, leveraging stablecoin, a very non-traditional asset. Although I know that you are serving non-traditional companies, but you're also serving some traditional companies, right? And as these things come together and converge, what kinds of things are you seeing? What use cases, and what exciting things are happening as these ecosystems come together?
Yeah, it's a great question, because I think when we launched the bank, and of course we're crypto friendly, part of this is that as a new bank, we are building in a really sophisticated approach to evaluating what have historically been considered high-risk sectors and jurisdictions and otherwise, right? Where historically banks and other folks in the financial sector have kind of painted a broad brush over sectors like crypto as one example. We're not doing that, right? We're kind of looking at what the gray area is and figuring out what actually is black and what is white within that gray, and doing the work to serve underserved sectors. Point being, we are crypto friendly, but as you pointed out, we are not a crypto bank, so to speak, right? Like, we're a nationally chartered bank, full stop, US bank. And so what comes with that is we're seeing everything from the manufacturing companies and the robotics companies and the energy and AI and robotics or whatever companies, right? And of course, we're seeing the fintech and the crypto and what have you. But there is stablecoin demand in a lot of places that people don't fully appreciate. I come from a crypto background, right? I built the crypto business at Goldman Sachs. And so I came from that perspective. And I think my biggest learning in the last 4 months, 5 months, operating as a bank in this context across sectors is we actually, when we built the bank, we are fully supporting stablecoin rails, not so that we can cater to the crypto folks. We do cater to the crypto folks for that reason, which is wonderful. But the fact is, if you're building a bank in 2025, 2026, it should incorporate the most modern payment rails. That's how we think about it. That's how our customers think about it too. And so we have seen, extraordinary interest from commodities and shipping companies, for example, right? who are active in far-reaching parts of the world that have had a hard time accessing dollars, right? And just by way of doing business, they have had to look for a payment rail that would suit their needs when they're trying to take delivery of a certain asset, right? That is in a far-reaching place. Tether has been a great solution for that use case for a long time. Tether has gotten them, you could call it like 80% of the way, but at the end of the day, off-ramps, you still need off-ramps. You're still a global company, in that example. You still need a bank at the end of the day. And so a bank that supports stables has been a very palatable solution for a lot of those folks. I could go on with a bunch of different examples, right? Like the commodities and shipping is one, manufacturing is another one, another interesting one that I mentioned. So super long global supply chains, right? You have a T plus fill in the blank delay for every layer of your supply chain. And so if you have a super long running supply chain that isn't optimized, you could be talking about weeks, right? You could be talking about weeks. You could be talking about months of working capital tie-ups because of T plus fill in the blank, or currency conversions, or et cetera. And so stablecoins are a great solution where you compress a supply chain with from weeks or months of settlement time delays just from regular fiat rails down to 1 or 2 days because you have improved finality across a long supply chain. So those are just two examples, right? The point being, it's exactly as you said, right? We are suiting you see the obvious demand from the crypto guys on stables, the fintechs, right? I'm sure Mastercard, very similar, payment companies, global payment companies that are rapidly adopting stables as a better solution for their end customers. But then these kind of like funky areas that people don't think about colloquially as far as where stablecoins are making a huge impact.
So we're going to come back to a little bit later the kind of the advantages, the speed, and what other technologies then are emerging just from that that are really exciting. Things like agentic commerce, but we'll get there in a minute. We want to save that till later. Keep you guys interested. Wilson, so Suzanne, has been talking about how, the banking from the banking perspective, like to me, she was describing kind of a gap that actually in the past, like fintechs exclusively occupied, and helped to fill. I know you do research and invest across kind of both crypto and traditional fintech, or you have in the past. Like, how are you seeing like these things come together? How are you seeing them come together?
Yeah, we're definitely looking at it more on the crypto native side, and as we've seen previously, a lot of crypto products have been building for crypto native people, and as we're starting to see a convergence across how you have these better, like more advanced financial rails. There's multiple products that are being built out there that are actually looking at how can we go where the users already are. So plugging into fintechs, plugging into other front ends where they want to expand their services. So trying to figure out like what are those projects that are actually positioned themselves to export some of these crypto native products into these front ends. And some of the examples that we're seeing is something like Hyperliquid, really collapsing the gap in performance on how you can trade perps on chain, and then using that as a platform in which it can extend those markets into various front ends. So you have Valor, which was one of the larger fintechs in Africa, plugging into Surface perps for their various users. And on the other side, on the lending side, you have something like Morpho, working with various fintechs like Robinhood, Coinbase, and expanding out to smaller fintechs globally as to how you can offer and expand lending services to some of your customers as well. And seeing where that can go, where all of a sudden now you can start to offer borrowing against your entire asset or across your entire portfolio in a way that wasn't maybe necessarily accessible to retail users previously.
So really opening up like the technology really opening up opportunity and a lot of cross-pollination. I mean, and Mike, I know that you have been investing across a number of technologies over these many years. What do you see as the biggest opportunities coming out of this convergence?
I think there's two questions you really want to ask. Like, what are the best opportunities and who's going to capture the value? The value to me as an investor is a more interesting question, but I think the opportunities are clear when you understand what the technology actually provides. So fractional settlement, immediate settlement, sometimes is a bug and not a feature. As people who, I guess right now are operating inside a Western economy that functions pretty well from a financial services standpoint, you have to recognize that sometimes like T plus whatever or accounts payable, accounts receivable are a way that people just actually handle their business. If you're looking for things that require immediate settlement or immediate validation that can increase capital leverage of the end player, those are where the opportunities to deploy crypto-based technologies really exist. But then the real question is who's going to capture the value of those opportunities. So Erebor is one example where it's, for a long time we've known that the rest of the world just wants their hands on US dollars. And it doesn't, all you have to do is talk to 5 people from 5 different countries outside the US to realize how difficult it is to do that. So providing an institutional way to provide access to that, to leverage that as a form of common payment is something that historically has only been offered to the largest of institutions through a player like a Mastercard or a major bank. If you want to kind of democratize that, that's one example. And then the other example is this fractional payment component where immediate settlement is really interesting. I think the biggest gift to the crypto world is AI quoting everything in tokens. Once you do that, you realize, okay, they're seeing the world in tokens. We see the world in tokens. There's got to be some overlap. Where does that exist? So you can go all the way down the stack to realize that at the bottom of all this is actually energy and energy procurement and making sure that functioned properly. And there's a huge problem, which I won't go into, around immediate settlement of your energy bill and metering that can be solved with crypto technology. And then all the way up the stack is the idea of agentic commerce when you actually have an AI agent doing things for you. Is the answer that you're going to have another bank or network type effect that solves the problem here? Like, that's the more interesting question to me. And the one thing that I feel most certain of, it's not even really crypto related, but if you're going to have agentic commerce, which I think most people in this room believe will happen, the idea of like a KYA, a know your agent to match a KYB or a KYC process we have today is the biggest gating factor and something that I saw just looking at like on-off ramps in crypto in a previous life.
I mean, we agree, obviously, at Mastercard. It's why we've been really focused on, first we introduced Agent Pay, a kind of agentic commerce framework for traditional card stuff, building on our tokenization technology that we've built over the past, 10 years with Apple Pay, Google Pay, things that you guys all use today. And then extended that recently into something called Agent Pay for Machines, which is kind of a new protocol and kind of system that does, it facilitates kind of a lot of trust by facilitating both the KYA, but also, certainty for the agent on who the merchant is. In addition, Mastercard is going to guarantee settlement on these payments, and we're going to enable them to happen basically in credit. Like the kind of buyer side entity is going to vouch to us that, the buyer is good for it. Like we will process the transaction as normal. They can pay later, but we'll guarantee settlement to the merchant because something that we recognize, and after talking to a lot of customers about this, businesses don't want to change their entire business model and not take advantage of credit terms. And so anyway, we're facilitating that and making that possible.
I think the one problem people don't realize in that whole surface is that it's a two-sided problem. One, you need to make sure that the transaction goes through on time, frictionless.
100%.
Yes, no, but in doing that, you're also solving the problem of, okay, if this is fraudulent, if they're false positive, false negatives, both are problems. So if you're saying like I'm going to only let 60% of these transactions go through to make sure I don't take on that risk, then 40% of your customers are pissed off that they're not getting immediate settlement. Not just the fact that, oh, well, I have this, if I let 100% go through, then there's a whole fraudulent concept of immediate settlement that I can't get back. So it's a double-sided problem of letting too many people go through, but also not enough. You really need that, as close to a net 100% accuracy level as you can possibly get. Otherwise, you're pissing off people on both sides.
No, I mean, it's why we're like, verifying identity on both sides of the transaction, which I think.
But verifying a human identity versus a good agent, bad agent identity is something that is a net new problem with an agent actually making the transaction.
It is a net new problem, and one that we're really focused on, on solving with our very capable security team. And our very capable partners, including partners like Erebor. Like banks will be able to participate in this system, but so too will, this is an entire new addressable market, actually, right? Machine payments, like these didn't really exist in the form that they can exist today, even a year ago. Right, like a year and a half ago, or like the first time that we were like provisioning payment credentials into agentic wallets. Anyway, so we're nearing the end. I would love for each of you to just like let everyone know what are you most excited about right now? What's like the most significant thing that you think is happening that's going to lead to value accruing? Especially in what you do in your portfolio, or for your investors.
Yeah, happy to kick that off. I think really what we were talking before, when you're looking at this convergence, expanding products and on the fintech side, plugging into crypto rails. I think what we're particularly excited for on the crypto native side and the products that are coming out of there is not how you can fine-tune your product a little bit better, but how you can grow an order of magnitude and find new ways to find new user flows and expand asset coverage as well. Because in many ways, we've been looking at these crypto rails, but the assets that are being offered have been relatively minimal and cater to a specific group. And so how do you actually onboard a whole new asset class where you can start to realize the vision of you can start transacting, lending against, trading against any asset that you particularly want, all under a single settlement rail.
We already kind of talked about agentic commerce and kind of KYA. I think that's something really interesting, but still very early in the life cycle of figuring out who's actually going to own what piece of the stack and capture the value. So I'll switch over to kind of the real world asset, where I think it's a little bit clearer who's really dominating what I view as the next generation of kind of, everyone's been talking about tokenization of real world assets, and that's some combination of Calsheet, Polymarket, and Hyperliquid. And how that plays out is something I'm spending a lot of time on.
Suzanne?
Yeah. I mean, it's not that we touched on a little bit the piece on stablecoins and what they have done for parts of the world that have lacked access to dollars, right? I don't think that piece is a surprise to anybody or necessarily is, I obviously, up and to the right, I guess, is the trajectory for the next 10 years on that specific trend. We're spending a lot of time in those markets with customers or prospective customers in places of the world that have just, partly informally dollarized via stables or have at least managed their lack of access via stables. We're spending a lot of time thinking about how we can bridge, how we can expand that access and really, drive productivity and constructive progress by combining stables with those areas of the world and banking access, true banking access combined with stables. So I guess what I'm really excited about is what productivity growth, what economic growth does that lead to, in the next 10 years. It's obvious stables gets the job done. If you combine that with true banking access, what can it really unlock? And I guess the only thing I would say otherwise, especially as it relates to the AI piece of this and that convergence, we're sort of at a point of singularity. I think about 10 years ago, right? 2016, if you were to ask your 2016 self, what will the next decade of crypto really look like? I mean, Solana didn't exist, right? Ethereum was fledgling. What would that version of yourself really say about the next decade? So I think as we're having this conversation, there's so much to look forward to, right? There's so many interesting things, but really, I mean, we're probably talking about the next 3 years. We're almost at this point of singularity for what does the next decade really look like? So that's ambiguous, but I think there's just a massive upside that we're not even probably quite ready to figure out what the right questions to ask are.
So all different perspectives, but I think, common theme. We all agree that there's a ton of brand new opportunity. We actually have no idea what's next. But there's all these technologies are unlocking a lot of new growth opportunity, and hopefully a lot of that will bring, new value to new players and lots of up and to the right. So thanks, everyone.